What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We do have the broad market, we have our core list of companies that we're always watching, and then I have 7 trade ideas to share with you towards the end of the video here, so stay tuned. Some of these ideas did come from Discord members, so if you want to chat with myself and other great traders, definitely check out the links down below in the description. The Discord is 100% free to join, and I hope to see you in there on Monday morning. That being said, let's dive into the charts. Jumping right into our SPY weekly chart, talking about candle structure and location as we always do, just to get some perspective. Certainly a red full-bodied candle, no upper wick, no lower wick, indicating that it was selling pressure constant and steady throughout the week, essentially. Obviously, we'll talk more nuance when we get to the daily, but that's a shift in tone, right? We haven't seen this for quite some time. The last time we really saw it was right back here. And what was the reaction that it was met with? Well, clearly some buying. So are they going to buy the dip this time? We'll take a look, at some more nuance when we drill down to the daily. But for now, from the weekly perspective, again, give yourself some perspective. If I just zoom out a little bit, remember the support trend lines that we're constantly monitoring. This is the first one to really pay attention to, still well above that, so still in an uptrend. And even if we come in from this low and do something like this, swing out, get our first couple of touches, you can see that our first touch is here. We then kind of get into it here. This is certainly a touch. This is certainly a touch. And we're coming into it as we speak right now. So it's not the end of the world. The market isn't crashing. It's not completely falling apart. It just feels like hot and heavy sell side activity because from a very granular perspective, intraday, it certainly was, right? I'm not going to deny that there was some serious selling that happened on Friday, most notably. The last thing I'll make you aware of before we flip down to the daily is that if we draw in our resistance trend line, I mean, look at that. It's still acting as resistance and we didn't break up and through it. So if you remember last week's video, we were essentially saying now is probably not the time for new risk-friendly longs. And this is why, right? Because essentially when you're playing at the edge here, again, you don't try to time the market top, but the market is more susceptible to some sort of pullback developing. In a bull trend, though, you know that we're buyers of pullbacks. So what we're going to do is go down to the daily and talk about what could potentially be on the docket. If you remember and have watched any of the videos, you know where this red box is coming from. If you don't know, it's basically just monitoring this sort of rhythm of the market, right? It has this sort of periodicity to it, and the red box is representing where that pullback could essentially come, and that's essentially working out, right? We haven't made it to the 50 SMA yet, but it could very easily happen over the course of this red box here. So I do think it's noteworthy that the market is respecting this sort of rhythm, as we said, that it's been following for quite some time. Now, what this brings me to is my next point, right? Although the market feels really bearish, should you be a seller here or should you be a buyer is the question I want you to be thinking about, right? Look at how many times the 50 SMA has given us a bounce in the past, couple of months here. Would it not make sense to expect the same thing to happen once again? I mean, even if we come into the 50 and or the support trend line, and just remembering that the support trend line is drawn in from this anchor low down here, touch 1, 2, almost, didn't really get into it there, 3. But why would you not at least take the stab to potentially go long here, right? Either at the 50 with a tight stop underneath or at the support trend line with a tight stop underneath, expecting that the market will remain in this rhythm. I mean, with the tight risk here, it just makes sense to me. So if you want to play to the long side, I would really be patient and see what the 50 SMA brings and or the support trend line. This is just a pullback that is going to give us an opportunity to potentially be a buyer in an overall uptrend. And I really want to hammer this home. We're not looking for the market to completely roll over. Now, if it does, we're going to know that, and we're just going to stop out, again, tight risk here and here, depending on your entry. And from there, we'll have a clear shift in tone, right? It'll probably be filling this gap, violating this area of support down here around 436, but there's no reason to even speculate about that happening until it does happen, right? There's no reason. You just follow and do what the market has been doing for, the past how many months now? You just do what works until it doesn't work. Direct quote from Peter Resnicek as well as Jim Dalton, and that's what's been working over the past couple of months, so that's where my eyeballs are. Now, there are a couple of things that we have to at least consider before we make it to the 50 SMA and before we make it to that support trend line. The first thing is the obvious gap in the chart between these two yellow lines. If it does start to fill, if we trade underneath 445.14, we're looking at a fill down to 443.71. That's the number to watch for. Now, depending on what happens, how that selling occurs, if we start printing hammers here, then who knows? Maybe the reversal comes early, or maybe the 50 meets us there. It takes a day to get there, does something like this, and then fills on the following day. There's a number of ways this could unfold, but if we trade under 445, you are looking for the gap to fill underneath to 443, and that would unlock essentially the 50 SMA touch, in my opinion. Now, we do have some scattered levels down below, and the main thing I would encourage you to keep an eye on is not so much this 442.89 anymore. That was really just from back in here, very nuanced level. So we'll remove that. It's really the 50 SMA, and then after that, the top end of this prior balance area right in here, around 441.10, we'll call it. Okay, so right now the 50 SMA is there, but obviously that's going to creep slightly higher as the week wears on, and the support trend line, again, depending on time of week, if we get into it here, that's going to start acting as a super support. So to me, this is all making sense for a perfect dip buy opportunity with tight risk. Now, eventually, one of these times, it's not going to work out, right? This can only work for so long before it doesn't work. And if this is the time where it doesn't work, oh well, right? We're going to take a stop out on tight risk with the potential possibility that the market turns around and heads back up towards the highs. I mean, how many times has this happened, right? We see a sell-off to the 50, market snaps back to the highs. Market sells off to the 50, snaps back to the highs. Market sells off, snaps back to the highs. And I would rather take this risk-friendly long down here than speculate to the downside and expect that the market's going to completely fall apart. So those are my 2 cents here on the S&Ps. Obviously, I'm willing to change my bias, but really only if we start violating the 50 SMA, clear closes underneath, and if this area of support and gap fill around that 436 as discussed comes into the picture. Until that happens, I'm just a buyer of pullbacks in an overall bull market, and I hope you can see the logic behind this trade reasoning. To the upside, as overhead targets, we're going to have all the same. Still 447. We'll have to battle back up through that. This 449 whole dollar is important. Double bottom that opened the gates to lower. And then after that, the bottom end of this little period of balance that we saw at 450.75. Those levels do not change. And obviously the top of balance and all-time highs after that. Next up, we have QQQ for the NASDAQ, and the picture here is slightly different. What you'll notice is that we clearly are much closer to this area of balance, and we noted that in the midweek market update as well. When the SPY was sort of falling out of its balance area, this was still hanging on up in here. Obviously, on Friday, we closed underneath that 379, we'll call it, bottom end of balance, but we're right at the top of our next support. So the question here is, again, this doesn't follow the same sort of rhythm as SPY has so closely, but if this does have room to fall, I would argue that QQQ and tech as an overall sector takes the SPY lower into the 50 SMA, and the QQQ could be coming into this here at this 373, we'll call it, or the gap and its 50 SMA, right? So look for this to act as a driver, if you will, if it continues lower for the S&Ps to get into that 50 SMA. If the Qs start, really going sideways here and just not really seeing that breakdown, I would be, all the more happy to go long the S&Ps as it gets down, if it gets down into some of those lower levels, support trendline notably, simply because the Qs would be exhibiting relative strength and tech makes up such a large portion of the S&P. Now again, don't get me wrong, this is only going to work until it doesn't work. And if it doesn't work, we just know where our tight risk is and then we reevaluate. But nothing, from a structural standpoint here has really shifted so much where you should be an all-out perma bear here inside of the QQQ just because we saw a nasty breakdown on Friday. Supports underneath are at this 373 as discussed, then 50 SMA and gap fill here. Underneath that, if it really gets nasty, again, this is where you start shifting your tone. If we get back into this range here and don't see a bounce out of it for a higher low from this area, right? If we're thinking about this from a trend perspective, let's call this the major low. This was then your HL, we'll put an H in front of that for higher low. And if we pull back into here, and we put in another higher low, fantastic. We just have trend continuation. But if we make equal lows and start getting into here and or lower, that's when you start to shift your perspective. Okay, could this be the start of a more serious turn in the marketplace? Until that actually happens, we're not going to speculate to the downside. We're still buyers of pullbacks in overall bullish markets. And last but not least, we have IWM Russell 2000 and the small caps, and nothing has changed here whatsoever. Still breaking down, like the rest of the market. I'm not going to deny that here, but just back in the middle of the range, right? As you know, here is sort of the range. Here is your midpoint, and this is not the place to be taking new trades. Your opportunity is here for breakout or reversion to the mean, and your opportunity is here for the same but opposite, reversion to the mean and or breakdown, right? So as it sits, still signaling neutral risk. It's not, aggressive risk off until it bottoms out down here around 208 and or lower, and it's not aggressive risk on until we get up and out of the consolidation range that we're in. And that aligns perfectly still with what we just talked about in the S&Ps. We need that risk-friendly pullback. We need the S&Ps a little bit lower to take that stab long because we're neutral risk. It's not aggressive risk where we're trying to buy breakouts here. We're trying to buy the pullback, tight risk, tight stop, and the IWM essentially and all the small caps, they're just confirming that, right? Neutral risk here. It's not aggressive on and it's not aggressive off. Nothing has really changed. Now, because we did break down underneath this 220-250 mark, you could potentially say we move lower, back down towards this gap. That would be something to watch. But again, in terms of using this as more of a benchmark, my thoughts, neutral on the IWM. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So kicking off our companies here with Apple, obviously this one had the nastiest day of all tech, essentially based on the catalyst of the failed or lost lawsuit rather to Epic Games. Regardless, this of course is a technical analysis. There's two scenarios I want you to watch out for here on Apple. First one would be a dead cat bounce off of this breakout point here and pretty much where we closed on Friday. If that happens, it's going to happen early on Monday. You're going to see a quick snappy move probably back up towards our 150-120 and maybe 152 the whole dollar after that if it's just a dead cat bounce, right? Monitor for continuation, of course, to see if you can get it into those highs, but if it starts rolling over again, that's where you need to say, okay, you know what? I've taken my little slice of the cake, time to move on, step out of the way, see if it moves lower. That's scenario one. Scenario two would be if we do see continued drift lower early on Monday, then you're looking for this to come back down into support trend line as well as horizontal congestion area from in here at that 146.50 mark and watch for signs of reversals such as, hammer candles that print, indecision dojis, basically anything that doesn't just cut right through it to the downside. I would start thinking about potential pullback buys inside of Apple. So those are the two bullish scenarios, right, for potential long ideas. The next one would, of course, be if there's a major breakdown, cuts right through, I would stand aside here on Apple. I wouldn't really try to short it just based on the nature of this up move here, right? You don't want to just the general theme of the broad market and things that are relatively strong stocks. I personally don't try to short them from a swing perspective and take advantage of that. Now, intraday scalps are fine, but to me, it just seems like chasing here. And again, in an overall uptrend, I'd rather be a buyer of pullbacks. But if we do break down through that, it's kind of step aside and wait to see what happens if we get down to this gap fill area. Again, you're not looking to trade this actual gap fill. It's just a target underneath us to watch for potential signs of reversal when we get there. And also note there's kind of a zone, right? You could just treat this prior breakout point as well, kind of as that zone area right around 136. Right? So if it comes down and breaks through all of these levels with ease, like just cuts right through them, this would probably be the area I would be patient for and wait to see if we get a reaction there. Next up, we'll head on over to Netflix. And Netflix is in an interesting spot just based on how relatively strong it was to the broad market on Friday. It didn't actually break down and close red. Sure, it did give back a majority of the rally from the day, but overall still holding up inside of these 4 days of consolidation does strike me as more healthy, of course, than clear red activity. So there's a quick scalp available if we do take out the 2-day highs at 609.29, 609.30, we'll call it round number's sake, just up to the all-time highs. After that, I'd be kind of skeptical of how much further it could go. I mean, keep in mind it's already made a 100-point move higher with very little, consolidation, right? 4 days isn't really enough to digest that massive move there. So for me, not really looking for the huge long, but maybe a quick scalp over 609.30 to the downside. Also, just like Apple, probably avoiding the short if we break down under 593 area, but rather looking for potential pullback buys if we come slightly lower and get into this zone, start showing signs of strength. So hammer candles, any sort of sideways activity here, anything that would be indicative of pullback, right? And this is just an illustration. I'm not saying the lower wick has to come down, of course, to that 565 area, but that is the next support, coincidentally, underneath, right? So Netflix, really waiting to see how this structure builds out. It doesn't strike me as an easy long or an easy short at this point in time. Next up, we'll take a look at Tesla, and Tesla did give back a decent amount of the week, right? It essentially had a red engulfing candle on Friday, taking back all of the consolidation that was put in above, of course, this breakout point from in here at 740, and we did close underneath. Just like Apple, if there's a quick dead cat bounce up above that area, then treat it as a look below and fail. So we're technically should be targeting the top of the range, closer to 761.35. And if it does sort of meander lower earlier on in the week, I'd be really patient, see what the reaction is at 725. We'll call it for round number's sake, and then potentially just just treat it as a zone, right? Just this general area, see what happens if we get any type of hammers that print right around here, and then potentially look for longs the next day over the highs to get back up into some of those upside targets. Remember that this one is still in a nice uptrend here. Look at that support trend line still intact. We made a higher high, so any pullbacks into it does still strike me as viable. We have the 50 SMA and 200 SMA coinciding with it right now. So again, any deeper pullbacks like this, start looking for buy opportunities at the support trend line, remembering that we're still getting something like this inside of Tesla. Nice rhythm there. Alibaba is up next, and again, I'll sort of just zoom in on this junky chart. Still an intraday trader only for me. You can take note of where these gaps are. As of right now, I'm not really seeing any reason to speculate on direction here. It's completely choppy. It gaps down, it gaps up, it gaps down, it gaps down, it gaps up, so on and so forth. So it's not really worth mentioning, but these are the areas that I at least see some inflection points at. So gap underneath, certainly a number of touches to this area here, 168. Up above, we have resistance here at that 175 or 174.20, we'll call it. And then the last gap overhead is here, 177.84 to 181.47. Do with that what you will, but again, really only looking at intraday setups only on Alibaba. Next up, we have Facebook, and Facebook again strikes me as still fairly bullish. It did not completely break down out of its range like Tesla did and like Apple. It's more like Netflix, really, just consolidation sideways up here. And again, remember that I said that Netflix could use some more time. Facebook has put in a decent period of time now from this overall leg higher here. So to me, this would be one of the candidates where I say, okay, if Facebook decides to break out over the all-time highs here at this 384, it's consolidated long enough where I would feel comfortable going with that breakout. So Facebook, certainly one of my top watches headed into the week. As we said, 384 is the breakout point. We want to see it hold up above our 375 whole dollar, also noting that it was prior pivot high. But if it does pull back, looking for a higher low to form anywhere in here around this 367, we'll call it, noting that the 50 SMA may also coincide. As you know, that could present a nice pullback buy opportunity. You could probably draw a support trend line in on Facebook, something that looks like this. We'll just use the 50 SMA for now. But again, Facebook does strike me as still relatively strong. Unless there's a massive breakdown across the entire broad market, then maybe it does something like this, but I'm just not seeing it at this given point in time. Next up, we'll take a look at NVIDIA. NVIDIA, just like Facebook, one of those candidates where for me, this consolidation does strike me as healthy. Price acceptance up here after the massive leg up from here. So watching for the breakout, really up above the highs, right? That would be a trade that we would be willing to take given the amount of consolidation that has been put in now. Again, on Friday, some decent relative strength. It did not close completely red, completely negative, breaking down any of its key supports. It's still in the middle of the range though, which brings me to my next point, and as I'll just sort of echo from IWM, right? Your edge is never in the middle. This is not where you want to get involved in a new trade. You really have opportunity here or here for either this, as we discussed, or this mean reversion. Same from the bottom, mean reversion and or breakdown. So as it sits, being patient on NVIDIA, but those are the overall levels. Bottom end of balance is 290, or let's call it 220 for round numbers sake. Top end is 230, about a $10 range here in NVIDIA. Next up, we'll look at Microsoft. This one is looking a little bit weaker in my opinion because it is breaking down out of this overall range. We have a candle close underneath, so maybe be patient on this one. The major obvious area to me is just this breakout point at this let's call it 289, let's call it 290 here, at a loss for words and numbers, but 290 would be the prior area to retest as potential support. So if we get into it, start printing hammers, I would be interested in potential pullback plays off of that. Again, just like the broad market, wow, really at a loss for words. It's still in a strong uptrend, right? When we're just buying pullbacks in an overall uptrend, nothing really sentiment-wise has changed here. And still we start seeing candle closes under the 50 SMA. If we were to do something like this, right, take that out, close underneath, close in here, start filling the gap, it's like, okay, maybe something bigger is starting to happen. But if we come into this breakout point, as we discussed, it would be a reasonable expectation that we could bounce there as a pullback area. So Microsoft covered there. Upside targets remain the same. We have this 297, 300, and 305, of course, is all-time high still. Gap fills from 283.70 down to 281.55, and that's only on a major collapse of the 50 SMA, and the Q's probably bleeding out as well. Next up, and lastly, we'll take a look at the beast, Amazon here, and what we notice is it's still accepting inside of the gap. I mean, still, just like Netflix, really, after a really impressive move like this, all the way from the lows of the massive gap down, right, and run lower, all the way back in, it's fine to really see the sideways consolidation. You can see it's holding the 50 SMA for now. There's nothing saying that it could go lower to the bottom of the gap again or fill the gap completely. As it currently sits, the structure isn't clear to me, right? Technically, you could call this a bit of a bull flag, but, ideally bull flags go perfectly sideways and or slightly lower. lower, not upward grind like this, right? This is really kind of more of a signal that maybe buyers are lacking the momentum that they had when this was going on right here. So Amazon, more of a wait and see, kind of in that same category as Netflix it was, where, you know, it's not overly bearish, it's not overly bullish. This consolidation is okay, but the run here, you know, it's not clear to me. And you can probably get that sense from the way I'm struggling to formulate ideas here. It's just one of those wait and see structures, in my opinion. If we do break down, I would imagine we go back down to the bottom of the gap here at this 3,400, we'll call it for round numbers sake. And if we move higher, I would expect the gap fill and maybe some resistance here, close to that 3,581. Quick reminder to hit that thumbs up button if you've not done so already, and then let's jump right into these trade ideas. So the first one is on WFC for Wells Fargo Company. This is a bit of a bearish idea for the banks. As you can see, Citi is also on the list here. We'll talk about that in a second, but just a clear bear flag. And this selling had nothing to do with the selling that happened in the marketplace. That was before that. I don't know if it was a lawsuit or there was some catalyst, right? You can see the volume clearly down below as well. But basically a bear flag here at our support trend line with a failure to really bounce hard out of it and even make it back to that 50 SMA. So to me, if we get a breakdown of the support trend line, you're looking for a filling up of the triangle down here to this 42.34. So a bearish trade in Wells Fargo. There's your triangle, of course. If we break down under the support trend line, the conservative bet would really be waiting for a breakdown of this low closer to 43.43, ironically enough. So that is a bearish trade. Not really interested if we continue to trade or, you know, get back above this 44.87 mark, the high end of the flag from right in here on Wells Fargo. Next up, we have Bumble. This one came directly from the Discord. Good relative strength on Friday, some sort of catalyst, I'm sure, with that large volume bar, but stopping right at a breakout point, right? So the 60.31 mark, if we can just put in a tiny little doji bar here, any sort of consolidation, and boom, take the break there, you're looking left at your next major target from right around here on the daily perspective. There's clearance up towards that 64.50-ish area, 65, we'll call it for round numbers sake, on the continuation play after that. Really, I mean, some serious overhead room after that towards 75. Again, with a falling apart broad market, I'm not entirely sure I would hold out on that long bet for the move all the way there, but some scalps definitely available to the upside if we see any of these breakout points come into play. On C, again, this is a similar bearish trade idea as what we had on that Wells Fargo, but it's a different structure, right? We can do something like this. So resistance trend line clearly in play. So that gave us, you know, touch or anchor up here, touch 1 and 2, forming a bit of a double top, right? So we have double top, and now we have neckline of said double top right about here. It's also just above that 200 SMA. So a larger breakdown across the broad market, really feeling it in the financials. If we see some serious acceptance underneath the 69.80 or 68, we'll call it. Basically, if we break down underneath the neckline here, then we could be looking for lower inside of Citi down towards that 66.48. So you can pick which bank you feel is weaker, which structure you like to trade better. I would probably go with the Wells Fargo. It gives you tighter risk. On this one, it would be a breakdown, and, you know, you could either put it above the 50 with your stop loss, with the target down here, or, you know, if you're more conservative, you put the stop way above the resistance trend line and look for much lower. There's a number of ways to trade it, but overall, bearish trade idea here inside of Citi, and that's going to be that one. Next up is Cisco, and I actually talked with a great, fantastic member of the Discord about this one, and what we were thinking was, you know, further pullback here, super support, 50 SMA, support trend line, prior breakout point, all of that stuff, basically what we discussed across the broad market. That would be a great pullback buy in my estimation with tight risk. Put your stop just underneath, looking for a retracement back up into some of these areas closer to 59. Again, not interested in the trade if we get down here and just slice right through. That would be a completely different story. You would shift the tone inside of Cisco, but until that happens, just respecting the uptrend, right? Looking to be a buyer of pullbacks in an overall bull market. Next up, we'll look at ORCL, and this one strikes me as relatively strong based on what happened again on Friday across the marketplace. I mean, look at this period of consolidation here. It just hasn't budged, right? And on Friday, certainly inverted hammers back to back, Thursday, Friday, but it's not like it broke down out of its range. It did not do that. It's just going sideways here, which strikes me as still price acceptance around this, 88 to 90-ish area on the chart. So just keeping it in the back of my mind, could probably keep it on a small watch list where a break up and over 91 would set off some triggers for blue sky breaks, right? Essentially, we'd be moving into all-time highs, and we would just look for quick scalps to the upside available here inside of Oracle. Not interested, obviously, if it breaks down out of this range. I wouldn't want to short it just based on the nature of this consolidation. Seems like price acceptance, right? Like it would keep trying to work its way back higher if there was some sort of breakdown. I don't want to be, on the wrong side of that. Next up, we'll take a look at Snap, and this one is it's kind of a neutral trade idea. You could do with this what you will, but same thing as Oracle, right? This one is a little more interesting because, as we know, tech is a little bit weak. Obviously, Oracle is still tech, but with the Apple breakdown and Snap, Apple, I mean, to me, they feel more alike than Oracle, which is making software that powers the whole thing, right? So anyways, regardless of how you feel about those potential companies and their differences, similarities, whatever, if we get a breakdown of this support trend line, then I would say, what makes this trade attractive to the downside is the gap underneath us, right? So if the market really falls apart, if the Qs fall apart, and again, we have to take out that more, backseat mentality where, there is a shift in the market, then this is one of those opportunities where there could be a short doing something like this, consolidation just above, take the break for the move into the gap and lower. So your trigger would be under 70 to fill the gap down towards 64 the whole dollar. Let's throw a level on there so we're aware. And again, do what you will with this. It does still strike me as price acceptance, but the gap is what makes this trade more attractive to the short side than what we just discussed in Oracle, right? So I want to just at least point that out, right? I'm not trying to cherry pick setups here and there. It's the gap which would make that short setup available. And then lastly, we have Alphabet Google here. I think I actually have a marked up chart with GOOG. Let's shift over to that one. And what do we got? Yes, we do. Okay, so here it is. And what we're seeing is, of course, a large red candle, just like what we saw inside of Apple. Big breakdown on Friday. If we do move lower into the support trend line, just like we talked about on Cisco, there's a number of things happening here. 50 SMA support trend line, horizontal breakout point from in here. It would make sense to be a potential pullback buyer at that point if we print the hammer candle for it, right? We're not just blindly buying down here. We want to see some structure build out where we can use a risk-friendly stop under the low of whatever prints and looking for a move back higher into the overall price acceptance. I would say we got into the earlier part of last week and the week prior to that, from 28.84 up to 29.18. We'll call it here 29.20. So those are the trade ideas. Again, kind of all over the place. Some of them are bearish, some of them are bullish. We're going to really have to see how the market resolves here, but that's going to be it. So if you enjoyed the video or learned anything new, certainly let me know down below in the comments section or by giving the video a thumbs up. I hope to see you all in the Discord. Remember, it's free, link down below in the description. And all of that being said, I wish you a green trading week.